What is up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies, like Bitcoin and others. So let's dive into Bitcoin here on the monthly time frame. So we have come down and set our higher low right here in comparison to the higher low we had here back in September. We are making our way up here on the monthly time frame. The question is going to be, how high do we go on this monthly run-up over the next few months before we set a lower high? In my opinion, it's very likely we'll set a lower high, because for us to come down to this level and then come up and break to a new higher high, we would need to go 126%, which I think is unlikely in my opinion. What I would imagine is that we set a lower high somewhere, maybe around 47K, because it seems like kind of the midway point between those two. So that seems kind of likely. And the higher we go, the more bullish we are, and the more likely we are to set a higher low if we come back down. So it would look something like this. If we come up and we stop right here, where we are now, it's much more likely, because we didn't travel very far, that we'll come down and form a lower low. But if we conversely come up and we go pretty far up, like maybe let's say we go to 55K and then we come down, now we've covered so much ground here that it's very likely that when we come down, we're going to form a higher low, and we set that higher low, and then it's going to be a question of, can we form a higher high? Or are we going to form another lower high and then come down and then maybe either go to a lower low or tighten up and then go to a higher high after that point? So this is setting up for what we consider an equilibrium pattern. So an equilibrium pattern is when you get the price tightening up, kind of like a triangle. So this is where, if you draw a line, it would look something like this potentially, where the price is kind of contained in this zone before eventually it either breaks out to the downside or breaks out to the upside. So it's setting up for that, and the reason why I say that is because of this, the magnitude of this move. So once we get that, and then if we come up pretty significantly, I would definitely say it's going to be an equilibrium pattern, and then we're going to set a lower high, and then it's going to be, do we come down and form a lower low right away, which would be the more bearish scenario, or like I said, what I just said, which is a higher low, and then we bounce around. So let's go to the weekly time frame. So on the weekly time frame, this last week we had a nice strong weekly close with a shorter upper wick of people taking profits. So right now we're still looking good for potential continuation here this week to higher prices. You can see that we had this increasing bull volume here, and we also had this hidden bullish divergence with a lower low in the RSI, but a higher low in the price. So the price was saying, although the RSI is lower than where it was back here on June 21st, we are still very bullish, and there's more buying pressure on this dip than there was here, because we did not go below the previous low here at 28,796. So that contributed to this rise in price, and then obviously we also had the short squeeze that contributed to that as well. So now we'll see how this weekly candle closes out. If we end up getting a inside bar, then it's going to come down to the lower time frames like the daily to decide the direction of where we're going to be moving. If we break to the upside, then I would expect maybe 1 or 2 more weeks of upside before we have to set our lower high, and then we have to come down and form a higher low, because we've already appreciated on the weekly time frame. Let's grab our magnet. We've already appreciated on the weekly time frame 45%, over 45%. So for us to continue going up and without setting a higher low is not very likely in my opinion. So we'll have to eventually set a lower high. The question is, where is that going to be? If we do continue higher, I would say that it's probably going to be up around 46.3 or maybe 47,000 big figure, which is right around this low, this low is actually at exactly $47,000. So that might be where we stop on the weekly time frame. All right, if we go to the 3-day, we can see that after we have set, after the last 3-day candle closed here, we had an interesting candle here with a lot of volatility. We went above the candle's high and below the candle's low from the previous 3-day candle already, and we still have roughly 2 days of this candle left. So it's going to be interesting to see how this candle ends up closing out for this 3-day time period, because of the fact that we had increasing bear volume over the last 2 3-day candles. So it'll be interesting to see if we end up getting another increasing bear volume candle here, because if we do, that could end up pushing price lower, potentially down to this gray support level down here. That's right around 34,500 from our bear trend right here that we had, where we broke down and then we pushed right through this level and closed above it. So we will see how this 3-day candle closes. I'm going to be keeping an eye on that one. If we look at this from a 2-day perspective, you can see that price is bouncing off of not only this gray support zone that used to be resistance right here and now has flipped to be support after we got these 2 candle closes above it. You can see we tested it back here. Boom, got a nice bounce here of about 11%. So that's a trade right there. So this is like what you can do. Obviously, nothing on this channel is financial advice. It's all for educational purposes only. But when you're looking at a support or resistance zone that you know is a valid level based on previous price action, one of the potential trades that you can do is the first retest of that level once it flips to be either a support zone if it previously was resistance like this gray level was, or the opposite if it was previous support and now is resistance. So for this scenario, you can see that when we closed below this level, it was resistance. We had here, resistance, resistance. Then once we closed 2 candlesticks above it, now we come back down and here's the entry point. Here is where you buy the asset with your potentially with your stop loss below the level, saying if we go below that level, then obviously the level is not valid as support, and therefore I want to be out of the trade. And then you could use your long position tool here, for instance, and you could say, all right, I'm going to go long on the top of this gray zone, and then I'm going to put my stop loss below, and then I'm going to say, all right, I think the target for this trade is, this R1, let's say. If that was indeed where you thought it was going to go to, you have a good risk reward of 2.96 here. Your stop loss is roughly 6.84% away from your entry, and you can ride that trade out. And you can see that you could even, on those sorts of trades, go to a lower time frame and set your stop loss even closer to the price if you were so inclined to do that as well, if you wanted to increase your position size and also improve your risk reward ratio as well. Because you can see if I had this put right here where I had it and my stop loss was here, my risk reward ratio, let's pull this up to the R1, is roughly 2.96, like I said. But let's say I put it up more. Now you can see the risk reward ratio is increasing. So if I pull it down, it decreases because then if I get stopped out, I'm losing 8.96%. But as I move it closer to price, my risk reward ratio is increasing. Now that's a double-edged sword, because as your risk reward ratio increases, you're also putting your stop loss closer to price, so the risk that you get stopped out is higher because it's closer to price. So price doesn't have to move as far to stop you out of the trade. So that's a consideration as well. So the daily candle just closed, and you can see it was a very bullish candlestick here off of this bounce, off of this daily pivot zone here. Very, very strong bullish price action there with increasing above average bull volume. Now you can see that the bulls have not gotten any follow through so far after this daily close. We've been just immediately dumping. So that's really interesting to see. I don't necessarily know what we're dumping off of, because on the daily time frame there's nothing up here, so it has to be something on the lower time frames. But anyways, that is what we're looking at for price right now on the daily time frame. If we look at a couple things like the Ichimoku cloud, we're now throwing this edge-to-edge trade back into the mix here, folks. So this is where we're going to be looking for a potential move using this indicator, what an edge-to-edge trade is, it's a potential move from one edge of the cloud to the other edge of the cloud. So in this scenario, the cloud is right around 47K. So if this trade were to play out, we would see the price gradually over the course of up until early September make its way up to about 47K, which curiously enough is where this gray resistance level from the 3-day time frame lines up. So let's take a look at that real quick. This is where we have our resistance zone from right here. So we had support, closed below it. So now when we return to it, should be resistance. Very simple there. So now let's go to the 12-hour. So from the 12-hour perspective, this is a level I talked about yesterday that held up absolutely perfectly yesterday. The interesting thing here was how far into this level we went before we rejected off it. So you can see that once we pushed through this zone and closed both of these candlesticks below it, it turned into a valid resistance level, in my book at least, because it should have been support right here, but it didn't act as support. We pushed right through it. So then it acts as resistance. So then what happens is we go into this level right here, and then as soon as this candle closes, boom, we get a rejection down below this key low down here, and then we get this crazy bull candle on the 12-hour with a very long body thereafter. So now we've closed above this level, but now the question is going to be over the next 10 hours, do we close above this a second time? Because if we close above it a second time, it'll turn into support. But if we don't, it'll maintain its resistance. So I'll be watching that. So that level is held up good for right now. Like I said, something else I wanted to point out on this real quick was this head and shoulders potential pattern. So head and shoulders is a bearish reversal pattern, and this comes at the top of a run. So you can see this is very clearly a run up in price, leading to this high up here, which is potentially our head. So now this pattern is a bearish reversal pattern because it signifies the end of this run up and then a potential drawdown thereafter. So if this pattern ends up playing out, which it looks pretty clean in terms of like these highs are very equal in terms of the shoulders, and then the head looks good. Now the question is going to be if the volume profile plays out for it as well. So what you see is you always see like the left shoulder has the most bull volume, usually, but typically, right now we're seeing this kind of is saying that's not the case. But then you see, the bull volume decreases from going from the left shoulder into the head, signifying kind of like the end of the run to some extent. Then you see a sharper decline off of that point, and that's what you're seeing here with this above average bear volume. And then what you need to see is a volume breakdown. So if it breaks down, you need to see the volume for the bear side look something like this candle or this candle with above average bear volume. A lot of people selling. So that's going to be what I'm looking for over the next few days. Since it's on the 12-hour time frame, it'll take some time to play out. But if that does end up playing out, what is our target? So our target is going to be from the head. We're going to measure from the head down to what's called the neckline. So the neckline for this pattern is where the shoulders meet. So if you're looking at my shoulders right now in the bottom corner, you see my neck is right here. The reason why it's called the neckline is because it's a line that goes across my shoulders. So my left shoulder and my right shoulder, similar to this pattern, left shoulder, right shoulder. The neckline is that kind of horizontal or sometimes sloped line. And the slope of the line tells you rather how bullish or bearish the pattern is. So if the pattern is sloping downwards, it is more bearish, and if it is sloping upwards, then it is more bullish. In this case, it's sloping slightly downwards. You can see that based on this low and this low. So we're going to measure from roughly where we think that neckline would be, which is right around here, I would say. So it's right around 4,500. So then what you do is you take from your measurement spot that you took your measurement tool to, you take that and you apply that 4,500 down. So now we're pulling this down into 4,500. So now the 4,500 is going to take us to roughly $33,600. So that's right inside of that gray 3-day support zone that we talked about. So that'll be an interesting development if we see that play out and push us down into that over the next coming days. I wouldn't be surprised to see that, and that's something that I'm keeping an eye on. If we do continue higher, let's say we close above this gray zone and we test this as support and then we go higher, this is going to be our next resistance zone over here, and this is on the 12-hour time frame like we said. This is from our bear trend right here where we had a high, low, lower high, lower low. So that is going to be where I will look for a potential rejection from price on the first test. So that is what I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you would like, check out our Leutheria Signals channel. This is where you can get 24/7 unlimited access to all of our trading ideas related to Bitcoin and Ethereum. So the way that you can get access to that is by sending us an email at team@leutheria.com. There is that email address in the description below as well. And then we'll send you the information you need to join that group and get started trading these crypto assets like a pro. All right, until next time, onward and upward.